All right, everybody, welcome back to another episode of the Discovering Multifamily podcast. I'm your host, Anthony Scandariato with Red Knight Properties. And boy, do we have a show today for you. Mike Morawski joins us today, who is a 30 plus year real estate investment veteran. And he's controlled close to $300 million worth of real estate transactions. Mike's not only an entrepreneur, he's also an author. He's a real estate trainer, public speaker, and now he's been doing a lot of personal coaching, which involves coaching hundreds of real estate investors to fulfill their dreams at the end of the day. So definitely want to hear Mike's story and how he got into real estate and what type of real estate is he really interested in and what he was involved in and what he's doing now in the future. So thanks for coming on, Mike. I really appreciate it.
Hey, Anthony, thank you for having me. I really appreciate it. So it's good. How's the weather there in New York today?
The weather there is pretty good. It's actually in the 70s, and we're recording this on November 9th, and it's a little wind chill, which is very surprising. And Mike's in Chicago for all of those who are listening.
It's a beautiful fall day here too. I love fall. So
Yeah, absolutely. So Mike, so obviously you've been in the industry for a very long time. How did you start? How did you get to where you are today?
yeah, great question. So here's how I started. I was in the general contracting business and woke up one morning and I was still pounding nails and I was burnt out. I said, I can't do this anymore. I had 22 guys working for me and 18 trucks on the street and just decided I was done. And I sold my business, took a year off, during which time I did a couple of fix and flips. They call it house hacking today. And that's what we did back then. And decided to go in the real estate business. So I went and started to sell residential real estate. And within 15 years, I built a team where we were selling about 125 homes a year and became relatively successful in the area, northwest suburbs of Chicago. And in 2005, I saw the market starting to change and knew that we wouldn't be able to keep that production up because of where the economy was headed. And we all know what happened shortly after that. But I went into the apartment business. And I had always followed a couple of large syndicators, one of which today is the largest REIT in the world. And the model always intrigued me, where you could raise private equity, buy a piece of real estate, marry them, and everybody make money along the way, right? And so I went into the private equity business, raised $18 million and bought $60 million worth of real estate, which was about 4,000 apartments in 5 different states. And we did that in about 30 months. Built a property management company, managed almost 10,000 units over time, and unwound those deals and went and opened another property management company, built that and sold that. And today I coach and I train. So that's kind of my journey from a 20,000 foot view.
That's great. So why is it, you touched on a little bit on why you got into the syndications, and you obviously you're a realtor by trade. So why didn't you just buy a bunch of single family homes and start a fund around that? Because it sounds like your brokerage they were probably getting off market deals and exclusive listings that nobody else saw. So why did you transition to multifamily?
So I believe success leaves clues. And it's like when I first went into real estate, I didn't know anything about the business. So I went to an agent in the area who had helped me sell a couple of properties and asked him, I said, Todd, would you teach me what to do? Can I shadow you, spend some time with you? He goes, I'll do better than that. I'm going to date myself now. He said, I'll make you a cassette tape. And he made me a cassette tape and I listened to it over and over and over again to learn how to market and go after the for sale by owner market and find off market deals. My first year in the business selling residential real estate, I did 78 deals, all for sale by owner, none of whom I knew, okay? So I took that same philosophy that success leaves clues when I went into the apartment business. Again, I watched a couple of syndicators for the years grow their business. Inland real estate, 3 high school teachers started with 1 4-unit frame building outside of Chicago and gone on now to be the largest REIT in the world. So the model worked. I knew the model worked, and I followed them, and always had, I really had a passion for multifamily because I knew the economies of scale, right? Owned a lot of single family, did a lot of fix and flips. Here's what I hated about single family was I own a single family house. I have a $1,500 a month mortgage payment. Nobody lives there. It's painful when I have to pay that out of my pocket myself, a month, 2 months maybe. But if I own multifamily, the economies of scale are in play. So if I have 50 units and 10% or 20% of the people don't live there, chances are I can still pay the bills and I can still pay my mortgage, and it's not as painful. I might not have as much cash flow. However, I can still pay the bills and take care of the obligations, right? So it's that economies of scale that really I had that fascination with and was passionate about.
That's awesome. So Mike, you mentioned, so you had the realtor business, which you focused on at least the first year, the for sale by owners, and then you mentioned a property management company as well. Why was that multifamily or?
Yeah.
Okay, so why did you guys make the decision to vertically integrate that way?
So when I went into the apartment business and we started buying apartments, the philosophy was let's manage our own stuff. So if I'm going to pay somebody that management fee, why not pay it to myself? So we managed our own property and built a portfolio of our own, but we also brought on we did third party management for other owners. So like I would own property in Texas and we would manage our own property, but we'd manage a couple other complexes in the area for other owners. So it just made sense to be in that business.
Right, exactly. And so you said you sold that as a separate entity, that management company, as opposed to the actual real estate, correct?
So we had the syndication company and the property management arm, that all got unwound and sold as a whole. And then I went and built another property management company and I sold that company. I built both of those companies extremely quickly over a period of time and then was able to liquidate the second one and get out of it. And the first one also too, and then went into the coaching and training space, which is, I love being in this space because I love giving back to other people and helping other people. I'm a carpenter by trade, so to stand back and see the completed house you built or the completed project you built, it's the same thing when you work with a coaching client, is when you see them succeed, have accomplishments, when they gain a better attitude and they grow personally, you really know you've kind of done your job.
Yeah, and it's I'm sure it's remarkable to see, as you just mentioned, and fulfilling. So that's what you're focusing on now. Are you focusing on more of people who want to be active in the industry or passive?
Yeah, that's a great question. So most of my coaching clients are active investors. They want to be active. So they are the ones that are physically looking for properties, sourcing off market deals, building teams around them that will help them be successful. And then, I teach them all of those steps, but also we talk about things like, why are you doing it? Because I think until somebody realizes their true why, their true calling, you can try and build a business, you can try and be an entrepreneur, but you don't really get it till you discover that why. And once you discover that passion and that why, now all of a sudden your whole world opens up to you and changes, which gives you a lot more to, kind of welcome into your world space, right?
Right. No, definitely. You have to have a purpose behind everything you're doing in order to be successful, in my opinion, as well. So how did you, you said it was you said 4,000 units?
Right.
And you were, what exactly were you in charge of? Were you in charge of like you just mentioned, on the active side, pretty much everything in terms of sourcing the deal, finding the lender, obviously putting the infrastructure in place for property management. What was your sort of role? Because you mentioned it was like 30 months, and then
Right. In simple terms, we were the GP.
yeah,
So
what does that mean?
we were the general partner. So we put the syndication together. We were the syndicator, the sponsor, and the operator. So we would go and find the deal, negotiate the deal, go to contract, and then go raise the money. So we put a business plan together, an exit plan. Uh, I always believe that you need to know what you're going to do along the way and how to get out of the deal, right? So we put all those plans together, and then we go out and raise money and close the deal. And we would typically be in those syndicated deals 30% on our side, and the investors would have 70%, and we would own it and operate it. Plus, the property management would be a separate entity and got paid for its service.
Right, right. And you mentioned it was in 5 states. Was it in your geographic region?
Well, that's funny you asked that, right? So the first deal I bought was in Chicago or outside of Chicago. Now remember, this is in the early 2000s, right? Mid 2000s. And prices were going up pretty quickly, almost daily, right? You'd put an offer in on a property, walk away from the closing table, and you made money already. The equity was just that fast, right? So this first deal I bought in Chicago, I learned very quickly a lot of things not to do. One being that don't take the seller's word. Make sure you do your due diligence. It was my first multifamily or bigger multifamily, and I kind of just thought you could do the same thing you were doing on a 2-flat or a 4-flat and just kind of overlook some of the traps along the way, but you can't do that. You have to dig in. You have to do some due diligence and really take a look. And I missed the red flags. I found out one of the big things was I found out that the price point in Chicago was so high that it wasn't going to give me the return on investment I wanted to see. So I went to my broker and we started looking in other areas. We looked in the Ohio Valley and bought property. We bought property in Alabama and we bought property in Dallas or the Texas market. And what we found was that I could pay a lot less money for an all-in cost on my acquisitions, including my CapEx, including all my closing costs and disposition fees, and still make money, more money than I was making in Chicago. So that's why we went to other markets. So if you looked at a map between Cincinnati, Indianapolis, we owned about 1,800 units in that area there. And then in Alabama, Tennessee, and in Texas.
Excellent. So that's the number one fear for sponsors who maybe they do self-management, and let's say, I'll just use us as an example, I'm not saying this is a fear of ours, but let's just say, how do they, in your experience, I mean, that's 5 different states, very, I'm not sure what a flight is to Texas or Alabama from you, how long that takes. But how were you able to build that property management company and not physically, at least Mike Morawski, be there kind of around 24/7 in case anything goes wrong?
So here's what's really cool is even back then, there was enough technology that you didn't have to be there. So there was enough, we didn't have the integration as much with like Zoom, like we're doing today, but you still had some integration between computer systems and email and property management software where you could communicate with on-site people. We were very strategic about on-site people that we hired. In the Dallas-Fort Worth market, we had a woman who was like a general manager who oversaw the other property managers on the other complexes and other sites. So it all comes down to structure, and it all comes down to your execution. So if you have a vision for something, what's the plan to get there? So I really believe that if you have the right people in place on your team, That's one of the first things I teach when I work with my coaching clients is I teach about team building and networking. You put the right people in and do the right networking, you're going to grow because it's that human capital, right? There's a lot of different ways that you can leverage yourself, but human capital is a big deal.
Right. And you mentioned something before, Mike. So divulging from property management now for the syndications, um, you mentioned you find the deal, you're sourcing it as a sponsor, the GP, putting it under contract, negotiating with the lenders, and then you mentioned raising outside capital. So where does that money come from? Or at least in your case, where did it come from to fund the real estate transactions you were trying to do?
So private equity,
Private equity. Yep.
right? So, that's always been an interesting question because it happened so fast. But I had some really good relationships up front. Everybody says, oh, go to family and friends first when you're syndicating that first deal. Well, I didn't have any friends or family with any money. So I'll tell you what I did back then was I put a little ad in the paper, learn how to be an investor in learn how to be a real estate investor in multifamily properties. And my phone rang off the hook. So I got a bunch of calls. I brought people to a conference room in an office that I was in and started doing presentations. So for the next 2 years, every week on Tuesday and Thursday night, I would put 20 brand new faces in a conference room and teach them about multifamily investing and show a deal. And we had people that just wanted to get involved. Back then, Donald Trump had a seminar that he traveled around and did. And he did this seminar, it was some real estate university. I don't remember the name of it, but he did it in LA, New York, Dallas, Chicago, one other market. And we went to 4 of those events over a 2-year period, LA, Dallas, and Chicago, and went to LA twice, or did Chicago twice, went to LA and did Dallas, and built a database from business cards and people that we met at there. So we had a table, have a booth, and we would raffle off a TV and give some books away and things like that. And we data collected. We just talked to people about being a real estate investor and about getting involved in multifamily deals. And I built a 7,000 person database over that 30-month period, starting from probably 800 people. So we built that very quick. And what's funny is somebody will invest and they'll start to see some returns and get some good success, and they'll tell their brother, or they'll tell their aunt, or their uncle shows up, or their sister shows up. And it's amazing how fast your network can grow when that's what you're focused on and that's what you're building into.
Excellent. And this is back with your syndication business. What period of time was this again? Was this
early 2000s? So
early 2000?
Started in 2005, unwound everything about 2011.
Right. So when you were syndicating back in 2000, and I wasn't in the business in 2000, obviously the Jobs Act, I think that was 2010, if I'm not mistaken. Maybe
yeah, that came into play after. I think it was even later than that, maybe.
So was there any regulation with for a lot of our audience is familiar with 506B, 506C, Reg D. Was there any of that?
Yep. So okay. I told you about that first ad I put in the newspaper. That was not a wise thing to do. Though, back then you couldn't publicly advertise for those types of offerings. Today you have crowdfunding. Today you have a lot of, people are all over the internet syndicating deals and raising money. So it's the whole market shifted and gone a different way. But back then the rules and regs were very strict.
Right. So what would be, just in general, advice for someone who wants to get into the syndications actively, doesn't own any real estate, or also on the flip side, passively? How do they evaluate getting involved passively? What does that entail as well? So give us both sides.
So to look for a syndicator, you mean? So if you wanted to invest with a syndicator, yeah,
Sure.
I would, it's a relationship business. It's about building relationships. I think that's what I really did back in my business was I built relationships, whether it was with brokers, whether it was with investors, whether it was with property owners. Um, I don't think that anything happens in anybody's world unless there's that relationship built till you and I know each other, right? Because you don't really care what I know until you know how much I care. So that's one of those philosophies I've always lived by. So as somebody looking to get into a syndication, get to know that syndicator, get to know that operator. Um, and learn how their business works, learn what their model is. Understand too that there's mistakes that get made along the way. And it's not necessarily the mistake, but it's what you learn from it and it's the recovery from it, right? So those are things that you look for too in an operator or a syndicator. And if I'm going to go into the real estate business as an operator or as a syndicator today, I need to have that mentality that I have to understand, how do I build a relationship with you who might want to be my investor? What do I do to build a trust and a confidence with you that you are willing to take that ride and understand that, things, as hard as we try to make things go smoothly and directly, that they don't always go that way and things can happen along the way. So you have to, there's that give and take, right? Now, market shifts, market goes up, market goes down. The funny thing about real estate is I've made money in a high market and a low market and an in-between market. I've made money when there's a Democrat in office and when there's a Republican in office. You can make money in real estate. You don't have to time it. There is no really timing the market, but real estate, you're going to make money in it. So I suggest to people, get involved, whether you're an active investor, whether you're a passive investor. If you're just thinking about putting your toe in the water, then go ahead and get your foot in there and take that first step. I look at it when I used to work with real estate investors who wanted to do a lot of hands-on investing. We would go out and we would look at property, and we might look at something that didn't need a lot of work, maybe just a little bit of cosmetic repair from the inside and the outside. But then we'd look at that property that was trash, that foreclosure, that real handyman special. And everybody comes to the table and says, man, give me something I can go in and fix up. And you go in those, and these investors would say, wow, I have no interest in this anymore. Let me just give you the money. You go ahead and do it. And that's kind of that education process too, right? I think if you educate your investor, you find that they are more inclined to work with you then.
No, that's a great point. I've been in that situation before myself, so great metaphor. So shifting a little bit to the coaching. So we got your story. So you built it up, sold both businesses essentially, and now you're coaching. So and it sounds like you love giving back to the community. What does your coaching process look like moving forward?
So a few different things. I have a couple of different coaching programs. I work with people either on a one-on-one basis or on a group basis. And my whole philosophy and focus is to help you be successful, to help you execute, because we can have all the power or all the knowledge in the world, but it's only, knowledge doesn't give you the power. It's only potential power. And you have to be able to execute on that knowledge. So I think there's a lot of things that come into play. The mindset piece, we talked about why are you doing this? Why do you want to accomplish this? Let's really discover that. And when we figure that out, I think it makes your journey a lot easier. Can we tap into your courage? Can we tap into your courage and help you move forward and be successful? Can we get you to where you want to go? And that's what coaching's about. And here's the other thing: it's a lot of times it's not so much about being about growing your business, although that's a big benefit from it, but it's growing personally too. Because a lot of times it's not what we get, but it's who we become along the way. And that's what I work with people on also, is how do we get you to be that person that can accomplish those things. Hey, you know what? Go set a goal for $1 million that you want to make $1 million. And whether you achieve it or not, who did you become along the way to get to that goal? And what did it do to your life? And what did you do to the people around you in your, I call them the stakeholders in your life, right? Those people that are involved with you that matter most to you. I think in the real estate business, what happens to a lot of people, especially if you've been in the business for a while, is we get out of balance because we get so involved and, oh, I have to take care of this, or we allow buyers and sellers to, control our life a little bit more. And what I find happens is that until we really experience those things and help people look at those things, we can't get there soon enough.
Excellent. Now, as we wind down the podcast, Mike, how could people find out about your coaching program? Where do they go? How do they find you?
Sure. Thanks for asking. So one thing I'd like to do is I wrote a book, and it's called Exit Plan. I know I talked about that a little bit, and I'd like to have all your listeners feel free that they can go download a free copy of it. So you can go to my website, which is mycoreintentions.com. And right on the front page, you can go to the ebook version. Now, if you're like me and you like to read a book and you want to turn the pages and highlight it and dog-ear the corners, and you can get that there also. But if you want to download a free ebook version, you can put in the coupon code box ARTE, ARTE, and that will give you a free download for that ebook. And you can reach me at Mike at My Core Intentions, or you can call me directly at 312-600-8007. And I'm more than happy to talk with anybody and answer some questions.
Excellent. And I called Mike right before the podcast, and he picks up the phone. So definitely encourage our listeners, if you really want to get in touch with him, just call him. So now that we wind down the show, I'll be posting a link to Mike's ebook as well as his website and social media pages on the iTunes description, as well as in our social media platforms as well. So you can, reach out to Mike any way that you like. And if you can please rate and review on iTunes this podcast, that helps Mike and I's ranking so we can get our message out to more listeners, and really appreciate everybody's viewership and listenership today. So thanks again for coming on, Mike. I really appreciate it.
Thank you, Anthony. I appreciate you having me.
Great.